More defaults hit China's property developers, threaten to ignite the next real estate crisis. I'm your host, Steven Van Metre, and thanks for joining me today. In a story that one day will make front page news across the world, China's real estate developers are defaulting on even more loans, threatening to trigger the next financial crisis. Let's head over to Bloomberg where we start the story off. As major China developer Sunac defaults as debt crisis spread. Firm failed to pay a dollar bond coupon before grace period ends as development fuels concerns that a crisis is spreading to safer firms. China's fourth largest developer said in a filing to the Hong Kong Stock Exchange that it didn't pay a $29.5 million coupon of the note before the end of a grace period Wednesday. And it doesn't expect to make payments on other securities. And I want you to understand, they're telling people up front, not only did we not pay, but we're not going to be paying on other debts that we owe you. That is significant. Home sales have been significantly affected by the recent COVID-19 outbreak in China, and that's worsened the company's liquidity constraints, it said. Sunac appointed legal and financial advisors to help it assess its firm's capital structure and liquidity, according to the filing. Now, I want you to keep in mind, they're saying that they're lacking liquidity at a time when every central banker, with the exception of China and Japan, is withdrawing global liquidity. And all of a sudden, you're going to see more and more companies say they have liquidity problems, and you know where it comes from. It's coming from central banks. China's property sector has been grappling with a debt crisis since last year, following a nationwide crackdown on excessive leverage and a string of defaults. More than a dozen builders have missed offshore note payments, including giant China Evergrande, which we covered extensively. High-yield dollar bonds from Chinese issuers, the bulk of which come from property firms, are extending losses after dropping a record 8 straight months through April. The extent of this has spread up the chain and has been a big surprise for the markets. Going into the cycle, you may have been expecting 20 to 30% of developers defaulting, but now we're talking about more than 60 or 70% of the market being priced under 60 cents on the dollar, where the implied default rate is very high. And what that's telling you, that investors who took on these high yield debts, which they paid big coupons, knew going into it that 20 to 30% of them were probably going to go into default. And then when that happened, they weren't going to get most of their money back, but they were going to get some of it, making the overall risk worth it. Now they're taking 2/3 of a loss on their investment, facing potential default and getting even less. And well, when that happens to investors, they go running for the hills, and that wipes out funds who are over leveraged in this space. Sunac is the biggest developer to default on a public bond payment this year. The development is fueling concerns about a new wave of debt failures among real estate companies that until just several months ago were considered safe borrowers. I want you to understand, everyone thought that real estate was safe, and that was no different during the financial crisis when everyone thought that homes and real estate in the United States was safe, and only later did we find out it wasn't safe at all. Some of Sunac's dollar bonds were indicated above 80 cents on the dollar as recent as of February. They're now below 30 cents. Talk about a major hit to investors. We are concerned that the event may be a prelude to a fresh wave of defaults among weak private developers that are teetering on the brink. These developers' cash crunch have been exacerbated by poor contracted sales amid China's lockdowns. And something I've suggested when we talked about the China Evergrande situation is that where there's one cockroach, there's probably more. And now the story is starting to get to the point where Sunac, one of the biggest and strongest property developers, is having problems. And now people are starting to wonder, hey, maybe the weak players are too. Well, no question, there probably are. It's only a matter of time before they hit the news too. Sunac missed an initial deadline last month for the coupon payment on a 7.95% dollar bond maturing in 2023 and had a 30-day grace period that expired on Wednesday. The default could trigger cross-default on other offshore debt, the note's prospectus shows. The payment in question was the first of $4 bond coupons initially due in April, but which holders have told Bloomberg they were not paid. And that's what you start to see here, is it's not just the fact that the people who invested in Sunac's bonds are losing a lot of money, it's what the contagion is across our global interlinked financial system. We don't know how far this can go. But like I said, in the financial crisis, we found out things went far deeper and far further than anyone could have ever imagined, threatening to put China as the epicenter of the next financial crisis. Nearly all of this year's public bond defaults among Chinese issuers have been by developers. Many others in the sector have exchanged or extended debt in order to preserve cash amid the home sales weakness and firms' inability to refinance offshore debt. Sunac has been in the spotlight for months. It has $7.7 billion of dollar bonds outstanding, all of which we can assume they're not going to be paid on, among the highest for Chinese developers. Its shares in dollar bonds have plunged some 80% since September, when a subsidiary's letter to a local government requesting special policy support became public. In Thursday's filing, Sunac said that given its liquidity constraints, that there's no assurance that it would be able to meet its financial obligations when due or within the relevant grace periods. Not paying when required or reaching a timely resolution with creditors may result in the acceleration of relevant financial obligations or taking enforcement actions. And what you're hearing them tell you is that they are likely and are expecting to default on their debt. And if you have one of the biggest property developers in China telling you it's going to default, what do you think is going to happen with all of the other companies? And that's going to cause a cascading wave through the global financial system that could bring the whole thing crashing down. But one thing you shouldn't be concerned about crashing down during the next financial crisis is your portfolio. Be sure to check out Portfolio Shield. I'll put a link up here in the corner and the description below. Let's continue on because the story gets even more interesting as we dig deeper. The Sunac China's holdings make local bond payment. Wait, they made a payment? The payment comes a day after Sunac China defaulted on dollar debt, highlighting the growing divergence of the treatment of global investors versus domestic peers. So rather than pay on their dollar-denominated debts, they paid on their yuan-denominated debts. And so you start to understand what this story is really about, and we refer back to the comment about liquidity in the previous article. And what it's referring to is there is effectively a dollar shortage, something we've talked about on the show. When there's a shortage of dollars, people that owe in dollars, such as Sunac, can't get them to pay on their debt. And of course, what happens with the Federal Reserve right now is they're tightening monetary policy, raising the value of the dollar as the shortage of dollars gets worse. And that only means there's likely more defaults coming until some trigger point is met and the whole system comes screaming apart. Wall Street Journal goes a little bit deeper as Chinese dollar bond defaults mount. Another large developer fails to pay. Sunac's fall was surprisingly swift. The 18-year-old developer had raised money from a dollar bond sale as recently as last July. Now let's understand what they did. They borrowed to get dollars last July, and now they're out. So that tells you just how bad the situation is. It was bad back last year, so bad they had to borrow to get dollars. Now they're flat out and just can't get any more. Telling you why they said we're probably not going to be making payments on our other dollar-denominated debt. They don't have dollars. And if they don't have them, and they're one of the biggest, guess what? No one else is going to have them either. So the dollar bond sale as recently as last July, a time when bond investors and global credit raters were confident about its ability to avoid the financial troubles of debt-laden peers, including China Evergrande and Kaiser Group Holdings. The two industry giants defaulted on their international debt in December after months of liquidity problems, and as we know, it's not gotten any better. Sunac was among China's 5 largest property developers by contracted sales over the past few years, according to CRIC, an industry data provider. That abruptly changed in 2022 as major Chinese cities entered various forms of lockdowns. The developer recorded an equivalent of $5.3 billion of contracted sales in March and April, a far cry from approximately $15.3 billion in the same 2 months last year. Shanghai, one of Sunac's biggest market, is now in its 6th week of strict lockdowns as central government officials remain determined to eradicate the coronavirus. And developers have defaulted or are on the brink of default may not benefit from these easing measures. We've talked about in a recent show that China is trying to ease policy and it wouldn't work. Well, we're starting to see signs that it's not working clearly, as home buyers have started to shun projects built for them for fear that the homes may not be completed. He added that the fall of Evergrande, Kaiser, and Sunac show that the government isn't trying to prevent defaults. Rather, its priority is to ensure homes are delivered to home buyers to prevent social unrest. And so, you start understanding debt-based financial systems, and when people lose confidence in the system, whether it's the housing market, the debt market, the equity markets, everything comes crashing down. And the government in China is saying, look, don't worry about paying on your debts. Get these people's homes built, telling you that if your portfolio or some money manager or hedge fund or whoever out there owns these things, well, they're probably going down a lot more and probably potentially some of them to zero. And now let's go on as the story gets even worse as China property loan growth slowest on record as sector struggles. Mortgages grew by a mere 8.9% in the first 3 months this year, and home sales have fallen for months despite fewer restrictions. As resident mortgages rose 8.9% to 38.8 trillion yuan from a year ago, slowing from the 11.3% increase at the end of last year, while outstanding property development loans grew after dropping for 3 straight quarters. And this is exactly kind of what I'm referring to, is as demand falls, as liquidity gets pulled out of the markets, all of a sudden you have problems start to crop up because the system is designed, this global monetary system is designed on continuing to fuel cheap debt into projects. And when it gets pulled out, well, you can see it causes a lot of problems. People lose confidence, sales fall, system blows up. China's home sales slump deepened in April with preliminary data from China Real Estate Information Corp showing an almost 60% decline in sales by the top 100 developers. The drop came with major cities such as Shanghai and Changchun under lockdown, and consumers stayed away even as purchase restrictions were loosened in more than 60 cities. And it gives you an idea here that just how bad the situation is, because any notion that there's going to be a recovery is telling you consumers don't just wake up one day after being pessimistic and say, hey, you know what, I'm super optimistic, I'm going to go out and buy things. Remember, they've been in lockdown for 6 weeks. A lot of these people have to get back to work, get their finances straightened out. There's a lot of things they can do, and probably buying a new home is not going to be top on the list, and these developers are going to be in a world of hurt. They already are. It's just going to get much worse. The sector's persistent downturn has prompted the central bank to step up its support for several distressed developers by loosening loan restrictions, as we've talked about, that haven't worked, and to ease the cash crunch last month. That comes after the central bank called on banks to boost real estate lending in the first quarter, and of course, as you already now know, it didn't work. And China's made a point. They're not going to intervene. They're not going to bail out dollar bond holders. All they care about is getting homes built, getting people in them, and keeping their system intact. If the global system falls apart because of it, well, I'm no doubt that they're not going to be too concerned about it. But now you can see the next epicenter of the great financial crisis is sitting right in China and is falling apart right before our eyes. Thanks for being fans. Thanks for watching. I'm Steve Van Metre. Bye now.